First time homebuyer 101, what is a conventional mortgage? Okay, so let's dig into it. Did you know that conventional mortgages account for over 70% of the mortgages in the United States every single year that occur? Yeah, conventional mortgages are the most popular mortgage type, and it's because they have such an array of options that they cover. So conventional loans cover owner-occupied, meaning you're going to live in the house, second home, meaning you're buying it as a vacation home, and investment properties. If you plan not to live there, maybe it's a single family house, 1 unit, 2 unit, 3 unit, 4 unit. 4 units is the max. So very important that you guys know that. If you're ever looking at a 5-unit building, that's commercial. But conventional covers all those different occupancy types, whereas VA or FHA or USDA is going to be owner occupied only. So conventional is a bit of the everything store. It's for first time home buyers, it's for seasoned investors, it's for, people getting that second home. Now, minimum credit score. The minimum credit score for a conventional loan is 620 as I film this. It's literally been 620 for the entire time I've been in the lending industry, so I don't really see it changing anytime soon. 620. Sometimes you'll talk to a lender and they'll say, oh, it's 640. That's just that lender. The actual guideline is 620. Now, the nice thing about all of this is there's a lot of transparency around conventional loans, and I'm going to tell you why. So they get sold to Fannie Mae or Freddie Mac. That is the end investor on conventional loans, Fannie Mae or Freddie Mac. You can literally Google Fannie Mae mortgage guidelines and you can see all the guidelines just like I can. It's an open book for everybody to look at. Very important that you recognize that, because sometimes people are like, well, I should be able to do guides. If the lender's telling you can't, check the guides. You can go online and Google it and check. Like, you can search by term. How much do I have to put down? Second home, Fannie Mae. There will be a grid that comes up that shows you exactly how much you have to put down. Like, it is all out there, which is great and wonderful to know. Now, do you have to put down 20% to use a conventional loan? This is something that is a myth, and I hear it all the time. No, you don't. If it's an investment property, you definitely are going to want to put down, I would probably say 25. Second home, you don't have to do 20, but you should. It's pretty brutal without. Owner occupied, conventional is where there's a lot of first time home buyer programs. So the lowest down is 3% down. However, there's some programs right now where if you're currently living in a specific zip code, Fannie Mae may actually give you a little bit of money to help you buy a house. $2,000, $3,000, and the lender chips in some. There's some very interesting programs. They also have a couple programs right now where if you're a first-time home buyer and your income is below the area median income, you get a pretty good discount to your interest rate. So, sometimes, and look, there's pros and cons to this, because as a lender, I can tell you it's tough. If I'm talking to a buyer, 700 credit score, buying a $400,000 house, they're under the area median income, and I'm making up rates, guys, rates change every day, and they're under the area median income, so they get this special program, and they're at 6.375. I could talk to a buyer in the same exact area, same down payment, same credit score, but if their income is above that area median income level, the rate can be 1/4 to 0.5% higher. Yeah, so look, they're doing stuff to help, but at the same point, there is that discrepancy right now. So if you go online and it's like, what's the average 30-day rate, 30-year rate, it's gonna be showing you an average of conventional rates, but it's going to be taking into account the area median income rates that are below market, as well as the market and averaging it. So it's not really a great guide for either. So what I would always say is if you are going to be buying the house, first-time home buyer, owner occupied, look, of course, call us. We're licensed in 48 states. We'd love to help. We can close a conventional loan in 12 days if you need us to. But you want to know that the lender's at least checking for these programs, and we're always checking for them, because I'm telling you right now, I really enjoy giving people a lower rate than a higher rate. So the other thing to know about conventional loans is the pricing hits are public information as well. There's a search term, LLPA pricing adjusters. Look it up. Very interesting. Now, this is kind of if you want to go deep in the weeds. It will show you the add-ons that lenders have to put for certain things. So like a condo, there's a condo hit, meaning condos are going to have higher rates than single-family homes in most situations, and you can see it right there in the pricing adjusters, which are public, because that is what Fannie and Freddie are dictating, and they are the kings, the queens of the conventional world, okay? Really important that you recognize that. Manufactured homes, more expensive. Second homes, wow, there's a big hit on those. So it can definitely make you feel better as a consumer to really see this stuff and go, oh wow, they're really not making it up about the condos, or yeah, wow, manufactured, this isn't just my lender lying to me. There can be a lot of transparency. So conventional loans, do you need an appraisal? It will depend. If you're doing 3%, 5% down, likely, yes, you will need an appraisal. If you're doing 20, 30, 40% down, when we run it through underwriting, it will tell us whether or not you're going to need an appraisal, and it'll be based on the property you're buying, what you're paying for it, et cetera, et cetera. So conventional is the most common loan. As a lender, do I need a home inspection? No. Do I need a pest? No. I don't need any inspections with a conventional loan, except I may need an appraisal. 9 out of 10 times I need an appraisal. 10 out of 10 times I would suggest one, okay? But there's no extra inspections. And it's one of the reasons it is one of the loans that you see the most of, right? It's because you can do an owner occupied with 3% down. That's lower than FHA. If you're doing less than 20% down, will you have mortgage insurance? Yes, it's really not that expensive, unless your credit's not great. What are the other keys? Oh, loan limits. There are loan limits for conventional mortgages, and I actually have a video all about that. I'm not going to keep you guys hostage for another 20 minutes. I'm going to link that video that teaches you all about conventional loan limits. But look, this is the loan that most lenders are going to look at first. Unless you're VA. If you're VA, I'm going to VA first, but they're going to start with conventional. If you don't qualify for conventional, then they're going to look at FHA. If you're second home or investor, conventional is your only choice unless you're buying at a very expensive level, and then you'd be looking at a jumbo loan. So I hope this video was helpful. Just a brief overview. Watch the next one about conventional loan limits. Thanks for watching.